Wednesday, July 24th, market analysis, Stan Ehrlich. I start out with indexes, go to futures, and we got a little crypto, sometimes forex, sectors, cycles, seasonals, about the same thing, and maybe some other stuff. Well, today, I'm a happy camper. I've been talking about this market having a very large downside correction, which I am now pretty darn, well, I don't want to use sure. You're never sure unless first time you're sure of something, it's going to fail on you. The evidence is pointing toward the likelihood of further decline, in my opinion. And we have now broken all of the lows that we have seen in the last approximate 5 weeks. It varies a little depending upon the index. But the NASDAQ, I'll get to in a moment, we're short, and the Dow YM, we're short, still doing great, especially the NASDAQ. Now, the E-mini has broken support. We're still floundering around that yellow support line that I've had for several days on the screen. So I will not be surprised, considering the huge amount of break today, one of the biggest down days we've seen in a long time, months. We're maybe ready for a little bounce all of a sudden, but it might take a few days, a couple days, one day, and it might be half of the amount we dropped today, a third, a quarter, something modest, and then down again. Or it's not going to bounce. I wouldn't get out of shorts. I may lower my protective buy stops, which my ER signals strategy automatically does for me. So I just sit back and watch, and I could change the rate at which my trailing stop moves. Other than that, automatic, and you'll see it in a minute. Love it. So I feel pretty vindicated at this point. All doubts are pretty much gone. And we're going to go down next to 5432, 5432, and maybe 54 flat. But there could be a small bounce between now and then. The process to get down to 54 might take about a week or week and a half. Next chart's the E-mini, 1 minute. And you can see we just made new lows a little while ago and a minor bounce at the moment. This support area I detailed didn't hold at all. Tried to for a few minutes. And now we're coming up to what is resistance. So I'm not expecting this little bounce to be very elongated time-wise and not very high strength-wise. Next, Spider, the father of the E-mini, of course, big down day. Now, I didn't mark it yet, but this is a big, well, I'll do it now, see if this works. Good, excellent. Big downside gap here today. And there's the top of the gap from yesterday's low, and there's the bottom, today's high. Gaps are almost always closed, but this gap up here, I told you at the time, looked like what's called a breakaway gap. You have a breakaway gap that starts something, a new move. You have an exhaustion gap that ends something and allows the market to do something different, like go up a lot slower or go sideways or maybe a reverse trend if the gap happens at the top of a rally. Now, this is a down gap breaking away downward after going up, so it's considered a breakaway gap to the downside. They're the kind of gap that is least likely to be closed, although they are probably closed more than half the time. Other gaps are closed by far and away much more than 50%. That's why I say gaps are almost always closed. So will this gap be closed? Are we going to go back up to 553.20 on the Spider in the next week or two? I can't rule it out, but I'm not frankly expecting it. Remember, and I'm not calling this a bear market, but I kind of have to use that phrase. because I am expecting a move down into October. The October low is coming up in a couple of 3 months. Bear markets move down probably 2 or 3 times faster than bull markets go up. They don't rally as often, they don't rally as much, and when they decide to make new lows, they make new lows by a chunk, larger amounts than a typical little downside dip involved in an uptrend. So this break has the earmarks of being something that's going to continue, in my opinion, into October lows. Next, spider. Huge gap. This is the 1 minute. Consistently making new lows this morning so far. QQQ, ETF, regular trading hours, meaning 6:30 to 1 o'clock California time. Big gap. Left a breakaway gap up here behind. And now finally a common gap back from June 11 and 12 is now closed. So I'm going to make that really faint because it's not particularly important at the moment. And let's go with a 10 opacity, and that'll make it very faint. Okay. Come and gone. Forecast came out true. Done. How much lower? Well, my next stopping point for the QQQ, 460. But I really do think we're likely to get down to 450 and maybe even 433. And I can't rule out even lower. Remember, I got to consider 2-3 months worth of down move. And that doesn't seem like a lot for 2 or 3 months of down. So as we go down, I will make adjustments as needed. Next. That's a Q, 1 minute. Not much important to show, except we're not stopping so far. The NASDAQ. We have an ER sell signal on the exact high day. And we are short the ER3 on a retracement the next day. So I'm plotting you the ER3 short the next day. It's about exactly the same price we got short the ER1 scalp, which is the dotted green line inside the red body. And I'm simply not plotting you the ER1 overnight, which would be almost identical to what we've got for ER3 as far as entry prices are concerned. No real difference. So there's actually 2 trades involved. Probably for tomorrow, I could turn one overnight on, and you'll see 2 green trade lines. And we're all the way down to here now, 19,348, 19,367, that is current quote. And yikes, we're short at 2672, give or take a tick or two. And here we are at 19,350, still short. This yellow line is our trailing stop. And I'm about to show you it on a very short-term chart. Same trade, much more detail. Trailing stop now at 19,611, short at 2672 on the July 12th date. Looking fantastic. Probably one of the best short sales I've had on an index in a while. Not just the fact that we're staying short for 1, 2, 3, 4, 5, 6, 7, 8 days so far, but it's coming down a lot. Next, we're short at the top of the market on the Dow, YM. It's a red bearish engulfing ER sell signal. We never got an ER3 retracement, so we never got that trigger hit. So the ER1 overnight is being plotted, and we are short at about 14,083, give or take a tick or two. And we're at 40,318. Remember, we're short at 41,080. And here we are, 40,322. Doing fabulous. New lows for over a week. Looking great. 5-minute chart of the YM plotting the same exact trade in detail. Near the lows. Stop is now protecting a very nice large profit, all automated. Russell, not that interested in what's happening, but We have a high today, just a little tiny bit above yesterday's high. And we were overbought within the allotted number of days backward that I look for overbought conditions. So if we were to get weak enough and get below yesterday's low, I'll have a red bearish engulfing ER sell signal near the top of the market, and hopefully it will go down just like the Dow and the short sale and the NASDAQ short sale NQ have done. And that would be the Russell. But again, I need to get below yesterday's lows. And that doesn't look particularly likely. It's holding up pretty good at the moment. Here's the 5-minute chart on the Russell. We need to get down below 22.24. Now, bonds. Little bit of a sideways movement, a little bit of a dip at the moment. We're slowly coming down a little more. A lower high than yesterday. Today, a lower low than yesterday, and close to the lows for the last couple of weeks, but coming into a support area. RSI is not helping one way or the other. It's very neutral. I am expecting it to come down to probably 117.12. Next, notes. They did get higher than yesterday's high, but we don't have any kind of an overbought condition until you go all the way back to the sell signal we got on June 7th, which for a scalp trade was great. We could have a bearish engulfing, but I think it needs a new low by a tick or two, but it won't turn red because we didn't get overbought recently. Next, and I'm bearish a little bit in both interest rates, not dramatically so, and not very fast. I think it's going to zigzag its way sideways or lower. Crude. New low for the move yesterday. Let me expand this out a little bit for you. Got oversold yesterday. Today we're up a little, and we have a doji inside trading range. Doesn't mean too much. Little decisiveness. Dojis. So could we bounce a little more? Yeah. How high? Maybe up to 79 and small change. That's not much. Am I bearish? Yes. Am I looking for new lows? Yes. And am I looking for it to go down to 74.90? Yep. Next chart. Natural gas, almost fulfilled my minimum downside objective, missed by a couple of percent probably. Hardly anything. But I'm not sure it's over. I think we're going to go down and actually get down to the 1986 level, which is, give or take a tick or two, the exact downside objective. We started slipping yesterday a little, and we're down a little bit more today. And I don't see any reason why we couldn't attack the lows and make lower lows. The longer term trend is, the trend is your friend, bearish. So I have to lean in that direction. Got no reason to do so otherwise. Support tried to hold, didn't hold, went down, breakout, oversold, bounced back toward resistance. Now it looks like it's going to make a new low again. Heating oil, almost the same story, but we sold the high day of the rally just before it went down, down, down. Yesterday was almost a new low, but it was a new low close. Our yellow dotted line trailing stop has been coming down almost every day, not quite, and is locking in now a great profit. Remember, we're short from the beginning of the green line at 2.6122, give or take a tick or two. And automated, 100% automatic, didn't do a thing, just watched. And watched it for the last few weeks to make a lot of money. We're now close to finally taking a profit. Not quite. We might turn back down. We're in some resistance. But I'm not going to be bad. I mean, we have to get out sooner or later. And this is great. Great trade. Gold, platinum, silver, copper, grains and meats, and a little crypto coming up in a moment. The gold market, I think, is looking toppy. We've got 3 overbought conditions, 3 highs. They're all just a little bit higher than each other. The last one hit that bullish resistance line almost perfectly. Too bad I didn't get any sell signals. I expect it to frankly come all the way back down to 2007, 2004, 23, I meant 2305, 2307, 2304. And if those numbers don't hold and it closes below these lows, Katie bar the door, probably go all the way down to 2158. Next, this I continue to tell you is extremely rare. I frankly don't expect to see another one like this in both markets, silver and platinum, at the same time in any market for maybe a few years. There's a head and shoulder top that was really this last shoulder and a larger head and shoulder top, and its minimum downside objective was 29,405. It took it breakout day, next day, and the next day the minimum objective was fulfilled. That was Friday last week. New low Monday, new low Tuesday, and today we're bouncing just a little bit. A little higher high than yesterday, a low that's higher than yesterday's low, but the current tick is down barely. I don't expect much more of a rally. The normal is halfway back up to the neckline, and it looks like we did that today. From the low, you could use a little fib calculator if you wanted. From that low to the neckline, that does look like about halfway. So any moment now, any day now, by the end of the week, we could see new lows. How low can she go? My minimum downside objective is 2407. Long way to go on this one still. That's the minimum downside objective on the bigger head and shoulder top, which started forming first shoulder April 12th. Head of the formation up here, kind of a little double top by itself. And the last shoulder is a small head and shoulder bottom top by itself. And it's already reached its objective. Wow. How about platinum? Honest to God, it got the same formation. I can't believe that we have a sell signal on the high day, the head of a head and shoulder top, which in its last shoulder created a small head and shoulder top in itself. And we have broken out of the small pattern and broken out of the large pattern on the same day. Well, that day and the next day for the larger one on a closing basis. My minimum downside objective for the small pattern is still not reached yet. We'll call it 430, 930. Sorry about those numbers, 930. But the minimum downside objective on the big pattern, which is well underway, should be down to 807 in platinum. Wow. Next, high grade. Still slipping, getting more oversold, getting seriously oversold now, down to 16. That's fairly rare. If I squish the space between the bars so I can see how last time we got down to 16 on the RSI, oh my God, it was way back on September 28th of 22. Almost 2 years ago is the last time we were at this oversold level for copper. We could bounce anytime, literally in any minute, start to go up. But I don't see it. We don't have any quote that's far away from the low. It's still almost low and last. It looks like it's going to make new lows. So I cannot rule out my first objective of about 4.0 or a little under soon. But again, the RSI level it's at is the lowest in 2 years. That means it could rally any moment. Next, beans. Got down to a very low RSI at 15, and that was a week ago, and it sure as hell turned around, like I'm thinking copper's about to do. So we might come up a little bit more. I got 11, yeah, maybe, and maybe up to 1143. So 1100 to 1143 is my objective area. If we get overbought and we reach 1105, 11, 2, 3, 4, 5, 6, Maybe that's going to stop it if we're overbought and with that resistance area. So I'm watching carefully the next few days. I think we have a good chance of getting up to 11 and then down big time. You know, beans have broken out of a gigantic support area, and these are new lows in beans since January of 22, 2.5 years. Oil, soybean oil. We were trading a rock in a hard spot, coming down pretty good today. Support below the market, very important, because if we hold that support and start to go back up, then we are probably still building a bottom, but I'm not going to go into detail yet. If we go up and break out of these highs, then it's a little bit more convincing that the bottom actually started during May and June and would be in progress. But again, we need to close above, let's call it 49 and 49.05. On the other hand, if the support below the market does not hold and we start to make new lows at below 41.75, then it's going to look like soybeans. Lower and lower and lower, big time. Next, meal, soybean meal. Very much like soybean oil, caught between a rock and a hard spot, but double top formation, second high is a ER sell signal, great. I'm not plotting at the moment, unfortunately, the trade. I could justify it still being short, but probably it made money within the first week and a half and got bumped out. So good, very good. Now, I do think it's going to stop rallying around here and start to make new lows. Minimum short-term downside objective 306 because of the double top. But if the support doesn't hold, it's going to do the same thing soybeans have done and corn and wheat have done. So like oil, meal's kind of in the middle of something. Corn, big, huge downside breakout. June 28th, I told you at the time. Great downside follow through. And just lately, we're showing some signs, and not so bad now, that a little bit of a turn could start. And that was the bullish engulfing ER buy signal on July 12th. Unfortunately, on July 15th, that was a Friday to Monday, we have a minor new low by, I think it was 2.5 cents or so, killing the signal on that previous Friday, the green ER buy signal. So, didn't work. Maybe a small scalp profit, but basically didn't work. I have to point out, though, that after the next day's new low by 2.5 lousy small pennies, there has been no new low. It tried to several times, came super close, within pennies. And now today we have a new high again for the last 2 weeks or so. Not holding all that well, but even if you close where it is right now, it's going to be a new high closing price since July 5th. We're talking about 2.5 weeks or so. Not bad. Starting to come up. Corn. But I can't get bullish. All I can do is justify up to a huge resistance area, 426, and maybe up to 440. And here's the longer term chart. That's why I say huge resistance and a major long-term breakout just a couple of weeks ago. This could come down all the way below $2 again. And we're at 404. Wow. We'll see. Next, wheat. I got the same kind of commentary in wheat as I do in corn and beans. We have a major long-term huge breakout again in wheat. The rally could come up to 560 and maybe 590. And we're 550 at the moment. So it's not too much more of a bounce. Remember, we have bounced some already, and we did get a buy signal almost at the bottom. It's still legitimate. It is profitable at the moment. Last time I showed you this yesterday, I think it was a small loss, but we're not out, and I'm liking what I'm seeing. Good, great, no problem. think it's going to go up even more. Again, maybe only another dime, but I can't rule out more. And my trailing stop, I'm probably going to tighten up now and change the kicker, which is the number that you use to change the speed at which your stop moves. Next, cattle. Higher high, slip back a little, trying to break above resistance. Looks like it's going to do it. If that's true, we're probably going to go back up to 188. I haven't been very sure about cattle lately, and I'm gaining a little bit more confidence on the long side for a move up to previous highs. About $3, 185 to 188. Hogs, new high, eating into a resistance area. But we're in resistance and we're overbought for the second day. I'm looking for a turn down. I haven't got it yet. I think we're about to top out. I'm not expecting much more bull move. Looking for a red sell signal. Maybe it'll be the top of the rally like that red sell signal in the very top or that one right there. And that's just since March. All right. In crypto, Bitcoin, BITO, ETF of a crypto. Now, I'm not much of a crypto fan, but when I saw this, I had to show it to you. Bullish engulfing ER buy signal on the bottom. Now, this is not trading 24/7 or close, a 23, 24-hour trading session on weekdays. And said this is an ETF, so it's trading from 6:30 in the morning to 1 o'clock in the afternoon California time, like stocks. And that's the reason why it has so many up and down gaps, because this does move quite a bit during the nighttime, apparently. Climbing a little today at the moment. Looks like it's going to work its way higher. An old gap right here is now finally closed 2 days ago. We have a bunch of gaps underneath the market. I don't see any sign of the bull move stopping yet. And we're back to the E-mini, low and last, 1 minute chart. Looks like it's going to make new lows again. NASDAQ, the one that's doing the best job lately, looks like it's going to make new lows again. I don't see any reason why not. 5 minute chart, not far away. Looking good. Lastly, the 1 minute YM, same thing as the NASDAQ, as you might expect, but they're not always the same. You have a great trading day, profitable trading to you.